Good day everyone. So for today's video, I will be discussing about the PAS-29 financial reporting in hyperinflationary economies. So this is the reference that we should use when accounting for companies are situated in hyperinflation. So before we move on to the discussion, let me first introduce myself. So I am Michelle Marzan Emboltorio, a fourth-year Bachelor of Science in Accountancy student. So let me explain what is PAS-29 financial reporting in hyperinflationary economies. So PAS-29 prescribes the restatement of procedures for the financial statements of an entity whose functional currency is the currency of a hyperinflationary economy. Now let's determine the different characteristics that indicates an economy is experiencing hyperinflation. So we have 5 characteristics. Letter A, the general population prefers to keep its wealth in non-monetary assets or in a relatively stable foreign currency. So since their local currency is already experiencing hyperinflation, where the prices are really high in terms of that currency, they must prefer to measure their wealth in terms of another currency. Letter B, the general population regard monetary amounts not in terms of local currency, but in terms of a relatively stable foreign currency. For example, there are certain countries where their national currency is the US dollar, even if they are not under that country. But they still use the US dollar to code prices in that currency because the US dollar is relatively more stable than their local currency. Letter C, sales and purchases on credit takes place at prices that compensate for the expected loss of purchasing power during the credit period, even if the period is short. So since it is a hyperinflationary economy, the value that you will receive is low, so in order to compensate for such expected loss, there will be an increase in price. Letter D, interest rate, wages, and prices are linked to a price index. So this price index is set by the central bank in such country because the price index is the one who indicates the overall prices of the goods. So if the interest rates, wages, and other prices are linked in a price index, it means that it is possible that the economy is already experiencing hyperinflation. And letter E, the cumulative rate over 3 years is approaching or exceeds 100%. So what is this 100%? This is the inflation rate of that country. So if we notice in over 3 years, it is approaching or it has already exceeded 100%. It means that it is experiencing hyperinflation. Okay, so the question is, are these only the characteristic that we should look out for in order for us to assess if that economy is experiencing hyperinflation? The answer is no, because according to PAS-29, we are also using professional judgment in order for us to assess if an economy is experiencing hyperinflation. Next is the history of PAS-29. So it is quite an odd standard because it was issued in 1989 for the first time and it was reformatted in 1994 and there were some amendments but no major changes. Moving on to the objective and scope of PAS-29. The objective of PAS-29 is to establish specific standards for entities reporting in the currency of a hyperinflationary economy, so that the financial information provided is meaningful. This standard shall be applied to the financial statements, including the consolidated financial statements of an entity whose functional currency is the currency of a hyperinflationary economy. Now let's talk about definitions mentioned in this topic. First is the inflation. So when we say inflation, it is the systematic decrease of purchasing power and destroyer of wealth, a fundamental fact of economic activity over time and creates serious financial reporting and financial management problems. And when we say monetary items, these are the assets or liability that conveys a right to receive or deliver either a fixed or determinable number of units of currency. Examples of monetary items are cash and cash equivalents, financial assets at amortized cost, loans receivable, financial leases receivable, loans payable, bonds, finance lease obligation, and provisions that are to be settled in cash. The last one, which is the non-monetary items, are the assets or liability that does not have a fixed exchange cash value, but whose value depends on economic conditions. Examples are trading securities, inventories, PPE, intangible assets, advances to suppliers, and advances to customers. Moving on to the restatement of financial statements. So according to PAS 29 paragraph 8, financial statements of an entity that reports in the currency of a hyperinflationary economy, whether they are based on historical cost approach or current cost approach, shall be stated in terms of the current measuring unit at the end of the reporting period. So we have the so-called restatement process for the financial reporting in hyperinflationary economy, and let's also remember the comparative figures for the prior periods should be restated into the same current measuring unit. So we have also here two approaches used in restating financial statements. The first one is the current purchase power approach, also called historical cost financial statements, wherein the emphasis in this approach is that general purchasing power statements change the unit of account but do not change the underlying measurement basis. The second one is the current cost approach. So current cost financial statements have been adjusted to reflect the effect of changes in the specific prices of assets held. The adjustment process is different in this approach, so an item's current cost or replacement cost at the balance sheet date is already expressed in a measuring unit that is current at the end of the period. The next one is the measurement. In PAS 29, the financial statement, whether based on historical costs or current costs, shall be stated in terms of the measuring unit current at the end of the reporting period. So procedure for restatement first is to classify all the items in the financial statements into monetary and non-monetary. Take note that only non-monetary items are restated when preparing historical cost financial statement. However, if the fair value or net realizable value was determined at the date other than the end of the reporting period, the fair value or net realizable value is nonetheless restated from the date it was determined. While monetary items are not restated anymore because they are automatically stated in terms of the net purchasing power of the peso. We have here the formula for restatement: historical cost multiplied to index number at the end of reporting period divided by index number on acquisition date. Here is a sample problem. A land was acquired on January 1, 2019 for 500,000 when the index number is 125. If land is to be restated on December 31, 2022 when the index number is 300, the restatement amount is computed as follows. So 300 divided by 125 multiplied by 500,000 is equal to 1,200,000. So let's now move on to the presentation of PAS 29. If any entities belonging to a group entity reports in a hyperinflationary economy, the financial statements of the entity needs to be restated first before they are consolidated in the group's financial statements. Additionally, if a foreign operation reports in a hyperinflationary economy, its financial statements are also restated first under PAS 29 before they are translated in accordance with PAS 21. Next one is the disclosures. Disclosures are needed in restated financial statements so that the basis for dealing with the effects of inflation is clear and the results are understandable. So the entity needs to report that current and comparative financial statements have been restated for changes in the general purchasing power of the functional currency, and that statements are restated into the measuring unit current at the balance sheet date, and it needs to identify and whether the statement restated were based on historical cost or current cost information about the general price levels and changes in them during the current and previous periods. Last one is about economics ceasing to be hyperinflationary. So when an economy ceases to be hyperinflationary and an entity discontinues the preparation and presentation of financial statements prepared in accordance with this standard, it shall treat the amounts expressed in the measuring unit current at the previous reporting period as the basis for carrying amounts in its subsequent financial statements. So that is the end of my discussion about PAS 29 financial reporting in hyperinflationary economies. I hope you learned a lot. Thank you very much for watching.